We have Manoj Bhatt, who is the MD and CEO, now joining in. Thank you so much, Mr. Bhatt. Good morning. Clearly you've reaped the benefits of the travel demand, which has rebounded strongly from those pandemic lows. Take us through how the quarter has been for Mahindra Holidays.
First of all, thank you for having me on the show. So it's been a very good quarter for us. If you look at from a financial perspective, I think profits at the standalone level are up 19%, and overall, I think at a consolidated level, we have seen a much more steeper rise. If I look at metrics around occupancy, we are looking at about 90% occupancy, which is very, very good. I think from a overall momentum in terms of members holidaying in our resorts and the overall economic environment, which is providing that boost, I think we are seeing a lot of positives come through. So net, a very good quarter, I think in line with what we were expecting. And I think that's something which we are hoping will continue into the future.
That 90% occupancy rate has been quite a revenue booster for sure. Take us through what kind of average occupancy growth you're anticipating now going down the line. What are the trends that you're picking up? And in light of that, how will you see your overall revenue pan out?
So from our perspective, obviously Q1 is a good quarter from an occupancy perspective, but it will dip based on the seasonality. So from our perspective, usually we look at about 85% overall average occupancy during the course of the year. We don't guide in terms of revenue, but from a perspective of, I think we are very.
I guess blame it on Mumbai rains. We'll try and patch back once again. Let me just refresh the screen and tell you where the market has headed so far. So we started off stable. From there, we've picked up. We are holding up almost 0.5% in the green right now. 24,570 is where we're currently at. The new listing for the day, Sandstar, that starts off with an 18% gain. So not all that bad. Emphasis, of course, is your big mover after its numbers. We just chatted with the management. 6% higher. Ashok Leyland, almost a 4.5% traction. Bharat Forge is looking very strong. Indus Tower, Syngene, they're all your big movers. But Tech M and Federal Bank, they're the ones which are slumping. In fact, Federal Bank is now down almost 4% as we speak right now. But I think Mr. Bharat is back with us. So you were making the point about, where is it that you see the occupancy levels headed?
Sorry about the connection. So from our perspective, as I was saying, that while 90% in this quarter is a high quarter and there is seasonality, overall we are looking at around 85% occupancy for the year based on our historical trends. And this is on an increased room base. And we have already said that over a longer term period, we want to double our room count from about 5,300, 5,400 today to about 10,000 by F30. So I think that's the plan we are working on with high occupancy level, which is a function of our model because as you know, is a member-based model and our member base is about 3 lakh plus. We crossed that milestone in this quarter. So from that perspective, I think that's the kind of growth plans we are envisioning as we go into the future.
Hi Manoj. Nice to see you in this new avatar. First time I'm interacting with you.
Hi, Nikhil. How are you?
So can I decisively say the turn of new member addition has started? Because a lot of your investors in a sense said, look, when will that new turn start that the new membership will start going quarter on quarter? Are you confident this trend is here to stay?
So if you look at this quarter, Nikunj, I think while we added about 3,700 members, compared to same quarter last year, it was a degrowth. But what we have done is if you look at the numbers, our average size per member has gone up 31%. So what we are doing is we are focusing and shaping the product portfolio, and that is obviously having some impact in terms of volumes. So if I look at from three perspectives, from a member perspective, you're right. I think it has seen a drop. But if I look at average size of the member or AUR as we call it, it's about up 31% and overall sales is up about 4%. So So I think that's something which we want to do consciously, even going forward, that focus on some of the plans which are more longer term in nature, and also focus on getting some of the metrics around quality of revenue right. So that's what's happened this quarter.
How, what is the plan in place to deal with the global business? I mean, India business is coming back, tourism is coming up, resorts, good occupancy, but you also have a global business. And if I look at the combined entity, then the word debt comes in.